or thereafter, when we have this great shorting opportunity on the way down and put in this final bottom here, this was not rolling over. And if we look at it carefully enough over here on that 200-week reading, which is the green line right here, is that we can see the value. We also know that that value increases. That's a good thing as far as really understanding the mathematical equations between these weekly moving averages as to the strength of the trend. Is it strong? Is it medium? Or is it weak? Well, right now, I am happy to pronounce on this particular trend, here and now, is that I have taken out half of that big last weekly down bar before this closing week right here. The body is above there. So my short-term support level on Google is going to be right around that 455 area on a closing basis. That is half of the SMF Pro Trader bar. One thing about trend that we use here at SMF, which is all proprietary, by the way, and was all mathematically designed in all trend structures and are very accurate. So if I'm going to hold as support here and I stay above that last big sell down right here and I get back up above there, that's called the SMF Pro Trader weekly bar. And if I stay above there, then I'm going to build a nice little consolidation, even though I've got upward resistance at the 200-week moving average. And you just need to know that, like anything, that's 486.32 pennies. That's the green line. The 10-week moving average, on the other hand, is 482.23 on this reading here. So there's about a $4 spread between the 10-week and the 200-week. And SMF has its own proprietary mathematical model with working with daily moving averages, weekly, quarterly, yearly. Doesn't matter. What does matter is that we're right on the trend, and the record will speak for itself. You're welcome to join our 5-day trial and give us your report card. Okay, before opinion, I hope. So if you want to give an opinion, come and join us for 5-day trial. If you're looking for a way of understanding markets, exchanges, and whatnot, hey, that's what we do. So basically that upper end right here, that 500, these are just your standard areas of overhead resistances where limit orders will be out in the market to sell into these resistance areas. That's why they are resistance for a week right here. Look, and then you collapsed. When you can't take out price, you got to get short, make that big down move. That's what we do. And the weekly moving averages were declining. When they are descending in value, any up move is shortable. And now you got a 10-week that just crossed over there. Somewhere along the line, within this whole trend structure, that 10-week is going to have to flatten out and not go down another stitch in value, period, for this trend to have good validation. So basically, as long as I consolidate above half of my SMF weekly bar, I'm back above it on a good closing basis. That's ultimately my SMF pricing support. From there, my upper end is going to be into these key 200-week and the 10-week moving average and short-term resistance. On the earnings side, a good earnings report in after hours could gap you above the 50-week moving average right into here. And that would be somewhere right around $535, which is that top end up here. You can see, let's see here, if I draw a horizontal trend line, that you can see all the pricing structures within that. There it is. Let's get it just right. Bam. 534.43 is up here. Earnings gap, if they come out good, another earnings gap is right into the 20 and the 50 week, right up in this trend line here. And tradable going in to July 15th earnings is the upper end of resistance would remain here right at that declining 10 week and the 200 week and the upper end of that 500. Okay, now just remember one thing, folks. If Google moves up $30 going into the earnings report, I already started moving up the bottom right here the prior week. Well, now we're going to report this Thursday, and I will be doing another video on how we're going to use the options market with both calls and puts.